Figured we would go ahead and crank up the room and see if we can get some bodies in here. Um, Welcome to the education room. It's good to have you guys here. Hope everybody's doing well today. Hope you're feeling good about the world. Hey, Luciano, nice to have you in here. Um, each and every morning, guys, we'll just do the news check before 9 a.m. forexfactory.com/calendar. Guys, this is my first stop every morning. I come here and I look for those high impact boxes. Whether it is, what is today? Today is Tuesday or Wednesday? Today's Wednesday. So we had the core PPI, the PPI, and it looks like it was flat, but it still created a really big, a really big spike. And that can mess up your plan, guys. It's trading is about patterns, and the market has a memory. And anytime there's a news release, it can affect your patterns. It can affect the memory of the market a little bit. Hey, good morning, Ali Hader, or good afternoon to you, my friend. The Sultan of Success. You crack me up, Ron. You got a different one every morning. So this is the first stop, guys. What's going on in the world? How can it mess up my good time? Anytime I see this red box, I just say to myself, you know what? Gonna sit on my hands, gonna wait, gonna look to see what happens. At 10:30 a.m., we do have crude oil inventories. Crude oil inventories are when they release the barrels that are in reserve. You'll see the market almost jockey for position a little bit before it. And then sometimes at 10:30 a.m., if you're trading crude oil, the market may spike, bounce, or become otherwise untradable. You'll have to make a choice on whether or not you choose to trade into that emotional response. If you are a member of the Nexgen Pro Trader Funding Company, it is forbidden. There's a reason it's forbidden, but you have to make your own choices, guys. Life is about choice. Um, we are going to talk about today, believe it or not, we're going to talk about a couple advantages, guys. And it's the same thing that I talked about yesterday. And I feel really comfortable saying that it's the same thing that I'm going to talk about tomorrow. And we're going to take the morning and we're going to focus on a couple advantages. We're going to look at two different platforms. We will look at NinjaTrader. I know there's a lot of you on NinjaTrader. We're also going to look at TradingView because I know a lot of you are making the transition to TradingView. So ask questions. If I'm talking about NinjaTrader in the moment, post your TradingView question. It's okay. I'll answer it. If I'm looking at TradingView, post your NinjaTrader question. It's okay. I'll answer it. But what we're really going to do, guys, is we're going to talk about advantages. More than anything, um, we're going to talk about um, momentum first, having strong triggers on a chart. We're going to talk about having room to our profit targets, nothing in the way. And then finally, guys, entries. Entries come in all shapes and sizes. You're going to see trend trade entries, and that's what this rule is for, specifically for a trend trade entry. You're going to see momentum trade entries. You're going to see high volume area trade entries. And then you're going to see the entry that I just like to call the jump the fudge in because things are going good entries, guys. I don't grade you on the trades that you take, but what I will do is I'll look at every chart that you post, and my promise to you is that we'll read it together. We'll talk about whether or not you had momentum on your side. We will talk about whether or not something was in the way. And when we look at your entries and exits, we'll talk about, was there a way to get paid? Was there a way to have less risk? Was there a way to have more profits? Um, so I'm going to give you everything that I have in reserves, everything rattling around this big old noggin of mine. And we're going to do our best really to become chart readers, guys. We're going to talk about momentum. We're going to talk about path. And then entries are going to be just a whole nother can of worms because there's so many options, but they're all rooted in these two basic concepts, momentum and path. This is my visual, momentum and path. I've got a souped up hot rod of a semi, and I've got 100 miles of road before I hit the mountain, guys. And this is what it's going to look like on your chart to you. You're going to say, holy smokes, it's going to be hard to stop this market with all that momentum. And there's nothing in the way to create a bounce. Let's find a way to get paid. And that's kind of the approach. And if you approach it like that, I'm looking for advantages. I'm not looking for a trade. I'm not looking for profits. I'm not looking to avoid losses. What I'm really doing is I'm trying to put myself in the best position each and every time that I enter the market. I'm trying to have an edge or an advantage each and every time that I enter the market. So we're going to say the perfect trade is when you have momentum, when there's nothing in the way, and when you can define an entry area, whether it is momentum, HVA, trend trade, jump in, whatever, but you have a rule for your entry area and it's been met. That's going to be a high probability trade. Each indicator on every chart agrees with the trade. If you use these concepts as your core focus, you'll begin to recognize when one goes away. And when one goes away, you'll call it a medium probability trade, not necessarily momentum. It could be clear path. It could be entry area. And when two of them go away, there's got to be this red flag that waves over your head that says, whoa, this is low probability. This may not be worth risking my money on. And guys, you're in control of the entry. That's really the only thing you're in control of, is whether or not your rules are met. There are driving forces that are going to create trends and momentum and reacted areas. You are not those forces. So when you know what's working for you, when you know what's working against you, guys, it's going to help you make decisions. You're going to say to yourself, this is amazing. I can't wait to enter. This is great, but not perfect. I'll manage assertively. This is just garbage, but I'm bored. I'll take it anyway. And some of you are going to do that. That's okay. Post it in the room. If you take a trade, let me see it. Let me see what you did. Say, hey, Mark, I went long, and this is why I did it. This is what I saw in regards to momentum. This is what I saw about those termination conditions. That's where I entered, and this is how I exited. Mark, give me a private session. Guys, give me a Y if you can hear me, please. I want to make sure it's not just fantasy. All right, cool. There we go. Let me write fantasy a note real quick. Thanks, guys. So what you're doing is you're telling me, Mark, this is what I saw, this is what I did, and where I did it. And then I'm not going to say, hey, you're the greatest trader ever, or oh my gosh, how stupid can you be? What I'm going to do is say, okay, your read on momentum is correct. Great job. You're recognizing that advantage, and you're able to see it in the moment. And then I'm going to say, great read on whether or not that area was broken or only had the potential. You're following the rules. You're counting triggers. Wonderful. And your entry makes sense. And that was your lowest risk entry with the highest profitability. And guys, gold star, right? Good job. Sometimes you're going to say, I had all the momentum in the world and a clear path, and I'm going to have to correct you. I'm going to have to correct your chart read because my goal is that you just read your charts, that you recognize these things and that you do it accurately. And my job is to teach you how to do that. So every time you post in the room, do me a favor, have a discussion with me. Tell me what you saw, how you read it, how you felt about it, where you did it. And guys, what you're also doing is you're writing a recipe for future success. Your annotations are going to serve as a trading plan. Man, every time I write that I have momentum and nothing in the way, I seem to make money. Let me put that into my plan. And the flip side is every time I trade into one of these damn lines, I lose money. Let me focus on not doing that. So we're going to talk about momentum and path, guys. You simulate. Post in the room. It's the first step in getting to where you want to be ASAP. The second thing is using a spreadsheet, guys, and I'm going to give these out for both platforms. This is your NinjaTrader spreadsheet, and I will go ahead and put the TradingView one in there as well, and I'll give you a little tour of them. If you are on TradingView, this spreadsheet shows you HVA trades, trend trades, and momentum trades. All of these trades are on the plan that I'm dropping in the room right now. So not only will we help you read your indicators, I'm also going to give you a plan to follow until you can create your own. Ideas on management, no more longs, no more shorts, and a trade tracking sheet attached to the back. For the Ninja Traders, it's a little more in-depth because I've been teaching NinjaTrader a lot longer. Let me open that up. There we go. Your first tab is identifying momentum through strong triggers And then even more importantly, knowing what it looks like when your momentum is gone. Identifying a clear path, once again, using triggers versus areas, and understanding when that advantage is gone. Defining entries. Over 500 pictures of client trades. Guys, up here in the upper right-hand corner, left-hand corner, excuse me, are the entry rules for the high probability trend trade, a little something to study. If you're a NASDAQ trader, there's some ideas. It's a very difficult market to trade for new users. Once you are comfortable with your reads, it slows down a little bit. Ideas on management. Up here is a very basic form of management, a very basic way to manage, and that is outlined in the plan that I'm dropping in the room right now for NinjaTrader called the KISS plan. You will begin to see patterns that repeat themselves, and there's even a place for you to build your plan with all the pictures that you take. And then once again, a trade tracking sheet. And guys, the trade tracking sheets at the back of both of these are going to be important because you're going to put a picture of your trade into the trade tracking sheet. You will have, because you're an amazing student, taken the time to annotate the picture. This is what I saw. This is what I did. You can name the trade. You can talk about whether you won or lost. And guys, there's feedback from the class. And this is one of the big things because every time you post in the room, we're going to discuss your read. So if your feedback from the class, and I'll show you, maybe it's perfect, right? That was the best trade ever. Great job. Congratulations. You absolutely killed it. I'm proud of you. Put it in your plan. Repeat the success. You're also going to see the things that are taking that success from you. Trading and determinations. This is mine. It's a page out of my own book. Trading and determination conditions. Maybe an early entry. Maybe a late exit, right? But you're going to get that feedback every time. If you take 3 or 4 minutes every morning and just study what you did yesterday, what worked? What didn't work? What kept me relaxed? What made me nervous, guys? If you do this every morning, and I promise you it takes 2 or 3 minutes, and if you're looking at well annotated charts, it's a very clear picture of the things that are bringing you success, and it's a very clear picture of the things that seem to be taking that success from you. It will accelerate the learning, and it will prepare you for the day. So post in the room, post lots. Take 1,000,000 pictures, guys. Take all the pictures. If you look at my library for 2025, I'm up to 5,439 pictures. Over 13,000 in here. And this was reset in, I want to say, October of 23. So awful lot of pictures. 7,800 in 2024. 5,400 so far. And guys, there's a reason, because the more pictures you take, the easier trading becomes, because it cements what we're looking for. And the first thing we're looking for is momentum, guys. Every chart has trigger lines. There are small triggers and large triggers. That's all you need to know about them. Small triggers and large triggers. These are going to define momentum first, guys. And strong triggers, rule number 1, means that there is space between these triggers that are up and above the large triggers. Large triggers are wide. The only way you can have strong triggers on NinjaTrader, guys, is if all the colors match. So small's above the large, large or wide, space between, the odds are favorable for the market to continue up. In a downtrend, background's red, smalls are red, large are red, space between the two. Odds are favorable for the market to continue down. This look should get you excited. This look tells you, man, the market's likely to push. This is the look that I need to break areas. This is going to be hard to stop, and this is even going to cover some mistakes that I make. As soon as the space goes away, so does the advantage. These are strong triggers. These are what we call weak triggers, when the smalls work their way back inside. And over here, we say the odds are favorable, and you're going to hear this as odds favorable momentum in this room all day long. Over here, anything can happen, and you're going to see people type that on their charts. ACH triggers, anything can happen triggers. I am void of momentum, and guys, this is when the market seems to reverse from nowhere. This is when Fibonacci areas are more likely to hold. You do have the exact same triggers on TradingView. I'm looking for it. Maybe I deleted that picture. But because TradingView large charts are a slower chart, you're going to look at where price is relative to these fast triggers. If you are left of the small triggers, price is left of the small triggers, guys, these are going to be the easiest trades you ever take, whether it is long trades or short trades. Being left of triggers in your direction is the advantage. When price works inside of triggers, this is a transition area, guys. This is when trades become a little more difficult. They need to be managed, watched a little closer, make sure the 1 minute's trading with you. And then once you're on the weak side of the triggers, this is where it's so important to make sure that your smaller, faster chart is in favor of that trade. You can still go long, everything says up. You just want to make sure that your 1 minute is really trading in that direction. So we're going to go through and we're going to say, okay, I have the advantage of momentum. That's my first step. Life is good. Let me make sure that there's nothing in the way to stop the market. NinjaTrader and TradingView are very similar in these regards. Horizontal lines on your big chart can stop the market. They all have names. Divergence, whether it is a magenta line from a pivot up top or whether it is a cyan line from a pivot down below. Divergence lets you know that there was a loss of momentum in the move. The market was moving up, it came back down, momentum was lost, there's your pink line. Same thing at the bottom. Divergence can stop a market when price reaches it. You can see it happens right there. You're going to see these yellow 1-to-1s on both platforms. Yellow 1-to-1s are 100% Fibonacci alternates. They can behave as support or resistance depending on the trend. You're also going to see on NinjaTrader Fibonacci. Guys, Fibonacci is what we've been doing for 30 years almost. And red lines will be areas of resistance in an uptrend. These areas can stop the market. Blue lines are Fibonacci support in a downtrend. These can stop the market. This is on NinjaTrader. When you get to TradingView, what you're going to notice is that you have what we call zones. A lot of you use the chart prime zones. There's some free ones out there, but it's the same idea. An area horizontal, guys, this can stop the market. And you can see that it does over and over. And then it comes down to the green, to the support, and it stops the market. So what we're saying to ourselves is, okay, with all of this momentum, let me make sure that there's not something in the way, something that could stop the market. The easiest way to do it is every time price reaches one of those lines, I want you to count triggers. So price reaches the area, the market gets to the area, and then you're just going to ask yourself, where are my triggers? So we define a termination. If price reaches resistance and the triggers remain below, that's a termination condition. That's an area that could stop the market, that could create an untradeable bounce. That's an area that's going to, more often than not, stop the forward progress. Absolutely no trades into that area. The market comes down, it reaches Fibonacci support. Where are my triggers? All 4 triggers remain above support. Support's a termination condition. It could stop the market. Absolutely no trades into the area. Learning how to identify a termination first is going to set you up for the trigger counting. And I'm going to bring it right over here, guys. When price reaches resistance and none of the triggers break, this is your opportunity to pause. Let's turn this picture into a picture. This is your wait for the reaction of the market. This is telling you, hey, it could break with the momentum, but you're not there yet. Guys, when 2 triggers break above and 2 triggers remain below, this area does in fact have the potential to break. It's less likely to break than if 3 triggers, both small and 1 larger above. This is when things start getting good. And then once all 4 trigger lines get above resistance, resistance is considered broken. And you'll see that resistance behaves as support. So every time you're looking for a trade, every time price reaches one of these areas, we're just going to count triggers, guys. If none of the triggers are there, I want you to say the area is going to hold. Whether it's going to hold or not, I want you to believe that it will in the moment, and what it's going to do is it's going to keep you from trading into termination conditions. When 2 triggers get through, you can say to yourself, okay, it has the potential to break, but it's not broken yet. I don't have my clear path rule met. It puts me into a medium probability scenario. Once 3 triggers get north of resistance, it's more likely to get the breakout. And then once all 4 are through, that's when it's clear. And guys, we're going to do this all day long. We are going to look at a live market, and we're going to go back to momentum and path. And you're going to be able to say, okay, I've got momentum. Smalls below the large. There's space between. Rule number one is met. But price reached a divergence low, and none of my triggers have broken through, which means that I don't have a clear path. That clear path is completely gone, and 65.64, this divergence low, is a termination condition. And my rules say absolutely no trades into that area. The same way when it reached the yellow 1-to-1s here, none of my triggers broke, and I had to sit on my hands and do nothing, guys. And you can see that that would have produced a loser had you gone long, and we are right in the process of potentially taking a loser if you decided to go short. Yellow 1-to-1s, create the bounce. Yellow 1-to-1s in resistance, create the reversal. Yellow 1-to-1s, weak triggers, it goes up over and over, guys. Rinse and repeat, same thing each and every day. So we're just going to go through. First, we're going to identify momentum. My smalls are not above my large. I have absolutely no momentum. Price reached a divergence high. None of the triggers break. Absolutely no long trades. And here's where we have kind of an interesting thing. All of my triggers are above this fib. I can't go short. I can't go long. 90% of my day is sitting on my hands and waiting for an edge, guys. Being able to look at my charts, and just say out loud to myself, I have what I need to feel good about looking for an entry. Does that make sense, everybody? That's what we're going to do all day long. We are going to identify momentum. We're going to count triggers. And guys, if we have both of these, we're going to go define an entry. And I want to show you how we're going to do that. I lost my pictures. Hold on just one second. There we go. We are going to use two charts. Two charts. Large chart is going to identify, where on earth is my picture? There it is. Large chart is going to identify the direction of the market through the background color. Whether it's red or green, it's going to be either down or up. Large chart is going to define the momentum in the market using those trigger lines, smalls below the large, space between. Large chart is going to define the areas that can be problematic, making sure that you have not reached an area that you've gotten through the previous. Guys, when the large chart rules 1 and 2 are met, when you have momentum and path, you have the keys to the kingdom. You are doing wonderful. You've got the advantages that you need to look for an entry. The first entry that we're going to talk about is for a high probability trend trade, and it comes on a smaller, faster chart. Your first two advantages are defined over here. The small chart is a refinement chart. It takes that one bar giving you all the good stuff, and you're going to see a retracement, hopefully a bounce and continuation in the direction of the trend. It's this refinement chart that's going to allow you to reduce risk. It's this refinement chart that's going to give you the ability to maximize your profit potential. So we're going to go through an entry or two, guys. And I want to remind you that on your Nexgen, on the NinjaTrader, we've got the entry sequence for both, whether it is a long or a short. The recipe is the same. And I'm going to show you exactly how you're going to be able to pinpoint where you need to enter the market, where the rules say to enter the market, forgive me. And it's just a pattern on the small chart. When everything is up on the large chart, guys, rule number 3, and I want you to really embrace this phrase. I'm going to buy a pullback. The pullback is the little retracement, that little push down. I'm going to buy a pullback at an area, at a fib, at a midband, or a yellow 1-to-1, and it's got to be inside of these large trigger lines. You have two sets of trigger lines on your entry chart. This increases accuracy. You've got the smooth trigger lines. These are the 5-1 triggers. You can use these to define momentum the same way you do on a large chart. And then you've got these stepped trigger lines. These are the large triggers from the large chart, synthetically put onto your smaller chart. Price returns to triggers. So your trigger lines will define where the retracement is most likely to occur. The areas inside, fibs, midbands, yellow 1-to-1s, the way these areas can create a bounce on the large chart, they can create a bounce on the small chart. But we're using them to create a bounce in the direction of the trend. So When everything says up on the large chart, when the momentum is strong, when the path is clear, you're going to wait for a reversal bar on the smaller, faster chart. This signals the beginning of the pullback. You're going to identify the trigger lines from the very top to the very bottom. This is where that pullback is most likely to go. And then you're going to make it even more refined. And you're going to say areas inside are where the bounce is most likely to happen. I have a mid-band and I have yellow 1-to-1. So I've got a little bit of a box here. It could bounce at the mid-band. It could also go to the 1-to-1s. But because of the large chart momentum, because there's nothing in the way on the large chart to create a bounce, your job is to activate a limit order 2 ticks above that highest point of support and just hope the market comes get you, because that is the absolute best of the best entry. In a short trade, it's the exact same thing. The large chart rules need to be met, guys. If you get sucked into entries on the small chart without the large chart advantages, your likelihood of success goes down dramatically. You're going to wait for the reversal bar, begins the pullback. You're going to be able to identify exactly where the pullback is most likely to go using those trigger lines, and you're going to be able to find where the market's most likely to bounce and continue with the trend by finding the area within. And guys, there is one area inside of triggers here. There is one spot most likely to create the bounce. Your limit order will go below it, making sure that you don't trip over a couple pennies to save a few dollars. And what you've done by defining where the market is most likely to continue, you've also defined where the market shouldn't go if this is going to be a winner, guys. It shouldn't go beyond that retracement zone. It shouldn't go beyond those areas in the retracement zone. And once it gets north of the triggers in a short trade, guys, your advantage is gone. Rule number 3 is off the table. It is no longer a high probability trend trade scenario. Same is true here. Once you get below those triggers, the advantage of rule number 3 is no longer in play. So you're going to use this idea for management, and your stops will go 4 or 5 ticks below those triggers, and you're going to say to yourself, and you will with a little bit of study, I have momentum, my path is clear, and I have defined the perfect entry area. They're going to have to come get me if they want my money. And that is the management plan that is outlined in the KISS plan that I put in the room, and I'm going to open that up for you right now. For those of you that are new, this is a plan that has been proven to win more than it loses. This is a plan that is dedicated to optimizing your chances of success. And this is a plan that keeps you on that high probability trend trade just long enough to get good at reading your indicators. With a little bit of simulation, study, class feedback, and practice, you're going to create your own plan. Until you're able, this gives you something pretty solid to enter or to follow. It defines your entry, and it tells you exactly what you need to see to have the highest chance of success. And then it goes into management, because management is where money is made, guys. Management is where fortunes are won and lost. The entries will become easy. The entries will become second nature. The entries are not difficult to recognize. It's what you do with those entries that produces results. So the same way your entry is very mechanical. If I have strong triggers, then I'll make sure there's nothing in the way. If there's nothing in the way, then I will find an area inside of triggers for entry. The management plan in the KISS plan is based on 2 contracts, guys, and it's designed to help you understand and trust stop placement, but it's also designed to get you guys paid, to get you focused on being okay accepting profits. New traders want to buy the mansion yesterday. New traders want the new Porsche yesterday. New traders are already booking flights to Scotland to go play golf. Guys, learn how to get paid. That's what this KISS plan does for you. It keeps it very mechanical, and you'll be able to create your own plan with a little bit of study and practice. But until you can, I'm going to walk through this management for you guys. If your entry is 2 ticks below resistance inside of triggers, that's the high probability trend trade entry. Then your initial stop is 4 to 5 ticks above the triggers. This is where the market should not go. Guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Losses are a normal part of a positive equity curve. Losses are a cost of doing business, guys. But we can put our stops where the losses make sense. And you'll know your risk before a trade is ever entered. You'll see your mid band. You'll know where your entry's going, and you can say, I need to be 5 ticks above. And guys, this has $150 per contract risk on the trade. That's $300 of risk going into the highest probability trend trade you could ever take. You have to be okay with that risk. If you're not, if you try to put a stop by areas and triggers, you're likely to get stopped out only to watch the market run. If you even keep your stop inside of that retracement zone, the same is true, guys. And there is nothing more dejecting than taking the perfect trade only to get stopped out in the wrong spot and watch it go without you. My hand is raised to the ceiling. I've done it more than once. So 150 per contract. This is where the market shouldn't go. And in the KISS plan, your stops are predetermined, $100 and $200. We're learning how to get in, get out, get paid. So if my stop is not hit, then I got a reversal bar in the direction of my trade, guys. And if a reversal bar prints in the direction of your trade, you're going to redefine where the market should not go. And I want you to embrace that phrase, where the market should not go. They've already given me strong triggers. The market has already provided a clear path. It has given me the most beautiful entry ever, and now it's going in the direction of my trade. My new stop is 2 ticks above that reversal bar, which means that I went from having $150 of risk per contract to having $30 of risk per contract, guys. So it doesn't guarantee a winner, but it means if something goes wrong, I'm going to take a tiny little loser, and that doesn't hurt so bad. So if they don't stop me out, guess what? I just made $100, guys, and if price reaches your first contract, your first target, excuse me, one contract is automatically removed. NinjaTrader pulls it. You're out of that trade. There's $100 in your account. Your palms stop sweating. Your heart stops racing. And you're going to go break even. You're going to say, you know what? I just got paid and I have absolutely nothing to lose. And the only reason I'm in this trade anyway is because my large chart is screaming down with absolutely nothing in the way. And guys, that's going to build the confidence to hold for the second target. And the second target is only $200 away from your amazing entry, which means that if it's hit, it's a $300 trade. And you're out. You're done. The ride is over. The pulse is normal. The breathing goes back to the way it was. And guys, if that was the best you could do each and every day, and I'm telling you, that's not the best you can do each and every day, but if that's the best that you pulled off every day for a trading year, that's $75,000 in your account. One of the things I tell new users to ask themselves, are you making $200, $300, $400 a day consistently? If you're not, let's figure out why. Post in the room. What are you doing to sabotage that success? Because it's very possible. It's very doable. The potential is there. You just got to learn how to recognize a couple advantages, how to keep it very basic, very simple, very pragmatic, and do everything you can to keep the emotions out of the trades, guys. Emotions rarely serve you well. So a trade is momentum, a clear path, and entry. Every chart posted in this room, I'm going to go back to these three concepts. I'm probably going to plaster them on your chart, and we're going to talk about them. The more you give away, the lower probability it is. So focus on the best initially, guys. And let's go look at some charts. Termination condition worked beautifully. And then it pulls all the way down to support. My triggers are way up here, and sure enough, it doesn't continue down. Guys, this is rule number 2, keeping you out of some pretty crazy shenanigans in the market. Didn't have to go long into this resistance, you avoid a loser. Didn't have to go long with weak triggers, you avoid a loser. Didn't have to go long into a termination, you avoid a loser. Guys, the market will sort itself out. Sometimes you just have to wait a few minutes for the best opportunity. 2 triggers through, all the momentum I could ever hope for. There is your first pullback to resistance inside of triggers. And now with only 2 triggers and divergence, guys, this one may struggle just a little bit more. But there is the pattern right there. And let me show you. So I'm going to take my picture. and I'm going to plaster. A trade is first momentum, separation between the small and large. It's consistent. Make sure you have it. A trade is a clear path. Now here's where it gets a little dicey. I don't have a clear path. I have 2 triggers through here, and that's the 4th are working through. Guys, I have to say, my path isn't clear. It has potential, but 4 triggers aren't through. It's not quite clear. When I'm sacrificing a clear path, and this is the second trade. This is the second trade in the trading plan, in that KISS plan. There's a couple things that you're looking for. I don't want to give up momentum, which means that I want strong triggers, separation on the small chart. It means that I want a low risk entry area. That's a pretty low risk entry area if I get in high. And guys, I want to manage it assertively because it's not perfect. I want to get paid and I want to get to break even ASAFP. Divergence is a loss of momentum. Divergence is the absolute biggest killer of potential to break trades. There was an opportunity to make money, and guys, a lot of you have a KISS plan in front of you, and it says if there is divergence, there is no trade. So when we watch the market live today together, there's going to be 2 times I'm willing to pull the trigger on my simulator. When the entry rules are met for the highest probability trend trade, when the entry rules are met for the potential to break the 50-50 trade, and I will manage them both according to the KISS plan so that you can see it live. This is an education room. I'm not calling trades, but when the rules are met for that plan, we will do our best to get a visual. That plan says divergence with only the potential to break is more likely to lose than win. Absolutely no trades. And guys, there it goes, rocketing beyond the triggers, rocketing beyond the areas inside. That would be an avoidable loss if you chose to take that trade. Does that make sense, everybody? This is all we're going to do today. And then we're going to go to TradingView, and we're going to say, okay, what do my triggers say? My smalls are pointed down, but my large are pointed up. But guys, price is on the strong side of down triggers. The market's more likely to go down than up. I'm going to wait for some agreement, but here is the challenge. I've got a big ugly area right here. Haven't even come close to breaking it. You can see that those same zones are mirrored over here. Guys, I don't have anywhere to go if I jump into the market right here. There's no place to go, which means I'm going to sit on my hands and I'm going to relax for a little bit. I'm going to wait for a better opportunity because my money is worth not trading into areas that can stop the market. And as I grow with the software, I may see things differently, but as a brand new user, giving yourself the highest chance of success typically is the way to go. Victor put a question in the room yesterday, guys, asking about 3 divergences on the small chart. Victor, did you get the answer that you needed out of that? I put a little dissertation in the room. Guys, the only small chart termination condition that we talk about in this room is 3 divergences in the same price range. And if you see it, 3 divergences in the same price range, it may stop the market. It could stop the market. It might stop the market. It's never guaranteed. The same way hitting a line with none of your triggers breaking, it's not guaranteed to stop the market, but it's a pattern that is common enough. No more short trades, no more long trades. This pattern becomes more powerful when you have those weak triggers, and it becomes even more powerful still when it creates a little head and shoulders. So, Victor, you had yours ascending, 1, 2, 3, and everything is still going up. This is still a termination condition, but we're going to use the same trigger count to decide when that third one is off the table. And when your small and large get above that pink line is history. And now we start the count over. Does that make sense? That's usually the lesson. It's easy to see 3 divergences, but that's how you break them, using those trigger lines and using that count. Divergence on the potential to break. Does everybody see it? Did anybody go short here with a little bit of hope, with a little bit of wish, with a little bit of want? Good job. 95% of our day, guys. sitting on our hands doing nothing. 95% of our day is waiting for those advantages, waiting for an edge so that we have the best chance of success each and every time we pull the trigger. All right, Pete got us started today. Let's see what Pete's doing this morning. He's using TradingView. Let's blow this up a little bit. His large chart has strong triggers. It has reached the outer band, and price is currently trading on the weak side of the triggers. But before it gets there, Pete says with everything down, with the strength, with room to get there, I'll take the trend trade. And I'll just ride it down with all that momentum. Nice trade, Pete. Good job. You did trade directly into the zone. Let's talk about this, guys. If zones can create bounces, getting in below the zone is so much easier. Just throwing that out there. If a zone can create a bounce, look at that. Doesn't it make sense to let the market get below that zone, to trade to the zone? Something to think about. Nice trade, Pete. Miss Jen, what did you do? Miss Jen says, Mark, check it out. I've got strong triggers. I've got the strongest triggers ever. This is the best momentum that I've ever seen in my life. Trend bands, Gary. Go to your indicators. Invite only. T3 trend bands. Strong triggers. It's only the potential to break. All the triggers aren't through. But I want you guys to see something. And this is pretty cool. With all of this momentum, I want to talk about why fibs are so powerful. I want to talk about why fibs are so freaking amazing. And I'm going back to this picture to do it. These people that move the market, these people that create momentum, guys, these men and women with the money, the influence, the backing to establish trends and keep them moving, they react at these key areas. They know exactly where these lines are. That's why these lines are likely to stop the market. These lines are where decisions are made by the people in control of the market. So Jen takes a trade with the full understanding that when price gets to one of these areas, somebody might make a decision. And you'll notice that she says the back of price clears. She allows the price bar, the big movers and shakers to get above that decision-making point. It's still not a broken area, but with this level of momentum, she lets it get above that decision-making point over here on her small chart. And guys, this is a trade rooted in absolutely nothing but momentum. And when she's got momentum, she's above the trouble, she jumps in, and you can see that she gets paid quickly. It's about a $100 trade, and that's $100 on one contract, and she's break even on the second. So that's a $100 trade in a matter of seconds. It's a beautiful trade. It's really well done. Jen, the only thing I could say is you've got a giant red line here. Giant red line. Is there any reason not to get paid at it on a trade that is rooted in nothing more than momentum? Management, guys, management is the difference. It really is. And I think that's the lesson. It's the perfect entry. It's the perfect conditions. And guys, let me show you how fibs are made. And this will help a little bit, Jen, because your brain is going to tell you, just hold, make it hit the fib, make it hit the fib. Guys, Fibonacci areas are not that picture. Fibonacci areas are built from tens of thousands of ups and downs, of pivots, of fluctuations, of retracements. And when you open your software, it goes back 10 days and it creates synthetic time frames, higher time frames, lower time frames. It projects forward. It looks backwards, guys, and there are thousands of calculations. And then the algorithm kicks in, and this is where I had no idea John Novak was this smart when we were growing up. It literally weighs and sorts every calculation. It says, where's the highest concentration? Which ones are the most important? And from this mess, you get that solid red line. But guys, you got to believe 2 ticks above, 2 ticks below. It's an area. It's based on thousands of calculations. It's okay to get paid a tick below one of these red lines, especially when it's just a momentum trade. Does that make sense, Jen? And guys, that's just it's an awesome lesson for everybody how the fibs come to be. It's amazing, and they are so stinking accurate, which I love. Great trade, Jen. Great trade. And guys, that trade is called the chili dog, and that chili dog is a gift from Ron C in this room. As he learned the high probability trend trade, he began to recognize that there's something to the idea that decisions are made at areas, and he began to recognize that with that level of momentum, he could get into the market, he could take quick profits, and it's just an opportunity. Away from trouble, all the momentum, and find a way. And that's one from the master himself. Backside of price completely clears trouble. Never saw this trade until I learned the high probability trend trade. Price outside of smalls, large trigger stack, nothing in the way, base hit. And guys, base hits pay bills. Base hits, $100. Your account doesn't know. This is kind of the thing that we forget. Your account has absolutely no idea if it made $500 in one trade or if it made $500 in five $100 trades. The goal is to get to the 500 and go enjoy your life. Go live life, right? So great job. Base hits pay bills. Have you new students, have you guys ever seen Moneyball? The one with Brad Pitt where he is the general manager of the Oakland A's or the Anaheim A's, maybe back then. I don't know who it is. And the whole idea is he builds a plan around people that get on base, not people that hit home runs, and they almost go all the way. And then the Red Sox implemented the exact same strategy a year later and did win the pennant. Base hits pay bills. All right, Paul. Termination condition here. Everything gets below. Back of the bar clears. And perfect entry, Paul. 100% perfect entry. Oh, maybe Oakland. Yeah, Andy, I don't know. I'm getting old and I sleep almost every night. And the A's have bounced a little bit. And then Paul, beautiful entry at 83. It goes all the way down to 70, and you give it all back. And the one thing that I posted in the room, and it's such great execution, Paul. These trades are so much more effective in building the P&L when you just accept that $100, $110 a pop is more than enough. 2 lot, easy $220 before anything changes. Remember that these trades are rooted only in momentum, guys. That's it. It's momentum, and that's what's pushing. And there's too many fluctuations in the market to believe that it's going to hold forever. And very often, it doesn't hold forever. And if you're going to hold this trade, break even's the wrong spot. You got to put your stop where the market shouldn't go. And that's all the way up here beyond those triggers and areas. And man, that's a lot of risk. I hope that makes sense. It's a great trade, Paul. Steve Diego. Odds favorable, momentum. Price is nowhere near trouble. You let it get above trouble on the small chart. Easy money. Great trade, Steve Diego. Same concept, guys. We haven't seen one trend trade yet. But we sure keep seeing these jump in with momentum and path trades. There might be something to them. All right, Todd. Strong bottom, 2 bounces, green triggers, but no momentum. On big, yes on small, tried long, no. All right. Todd, what's the one thing missing from your momentum trade? Do you see it? You said it right there. No momentum. It's very difficult to take a momentum-based trade if you have no momentum. Your entry makes sense. Your large chart didn't have what it needed. And sure enough, it failed. The one thing, Todd, and I'm going to give you one lesson. That stop is 100% hope. This is, I hope, despite everything turning, it still goes up. And that's okay if that's your trading plan, guys. That's totally cool. I don't tell you how to do it. What I can tell you is as soon as that bar closes on the wrong side of those small triggers, as soon as that down bar prints, that trade is effectively over. Even if you give it a couple, you could take a 10 tick loss on this one and just wait for the next best trade. Giving away $335, $338, giving away $300, you just don't have to lose that much. The accuracy is way too high, guys. So when you guys enter a trade, and I haven't mentioned this in a little bit, I encourage you to name the trades, guys. What kind of trade am I taking? If I'm taking a high probability trend trade, what's it going to take to get me in? Well, the KISS plan, right? The KISS plan's going to get me in. The KISS plan's going to get me out. I'm brand new. That's all I have to think about. Entering the market, especially for my newer users, entering the market is based on advantages, right? I enter the trade because my rules are met, because my rules describe a pattern that wins more than it loses. Takes all the emotion out of trading. I know it will both win and lose. Why will I exit? This is where the good stuff happens, guys. Exits are either taken at profit targets. They can be predetermined. They could be Fibonacci areas. It's okay, Todd. It's a great lesson, brother. It's a great lesson. Or, and this is the key, when the advantages that had you enter the trade have gone away. So Todd, let's go back to your picture. If the advantage that you were doing was momentum, right? Small's outside of the large on the small chart, clear path here. If momentum is the reason for entry, that loss of momentum is an outstanding reason to exit. Does that make sense, Todd? Because once you get left of these triggers, it's going to go down. And you don't know how far. Typically, if the rules are met over here, it turns into a trend trade. But we're losing the rules here, and you can see that change on your small chart. And Todd, you actually had a better one of your trades to go short below the fib to the next fib. Does that make sense? You got so married to a long that you forgot to take your short. I've seen you take that short before. And guys, that's okay. This is one of the greatest things about annotation. So Todd, your job is going to be to go back and re-annotate this chart, to put it into your trade tracking sheet. And over here, and feedback, put momentum in, loss of momentum out, small losses save lives, or whatever you need to put. And now that's your lesson, right? And tomorrow when you take this trade, tomorrow when you take that momentum trade and you lose momentum, you're going to be like, holy crap, that was not a big loss. I can't wait for the next trade. And you'll be ready to go take that next trade. Great picture, Todd. Thank you for posting that. That's a good lesson for everybody. Caleb. Everything says down. The momentum is strong. Caleb, you go down with it and get paid. Nicely done. You guys have really latched on to this idea. My promise to you was that if I can see a way to do something a little bit better, I'll mention it. Caleb, are you with me in here? Large chart is rock star, right? Termination, strong triggers, awesome. One of the things you can do to increase the likelihood of not getting caught in a bounce is decisions are made at lines. Letting the back of the bar, being willing to wait just a little bit, let the back of the bar clear that small chart trouble, and it really does. It increases the likelihood of success. Because even on a small chart, let's go to a small chart real quick. We'll get out of that big ugly move. These areas can create bounces, and these areas can create bounces over and over. And what happens is if you get away from that bounce point, what it does is it gets you away from that decision making. And this is a good example. Well, you don't have the momentum to push it yet. Let it clear the area before entry. It adds a little giddy up to what you're doing. It costs a couple ticks, but it really does set you up for the good stuff. Where are we at? Caleb, Ron. All right, guys. Oh, John gave us one. 2.5 year. Is this 2.5 years ago? So let's see. When looking at divergence, compare the small trigger location versus the large triggers. If no change in the small, triggers breaking above large triggers, do not exit or worry about your trade. Triggers say down, strong still possibly. Triggers say up, good reason to exit. That's a good little tidbit there, John. I like that. How cool is it that the CEO of the company shows up and still teaches? The writer of the software. Pretty amazing. Guys, smalls are above the large. I don't have momentum, even though I have a clear path. Large chart's not given what we need. Not yet. S&P is just screaming down. And then Caleb, here is a good example of what I was talking about. Muy importante. Guys, management is it. Guys, for those of you that are just trying to jump into the market, when this is screaming down, you're excited. Creates a bounce, creates a bounce, creates a bounce, clears it, easy money. This is like the greatest example of what I was just talking about to Caleb. Large chart says we're more likely to go down than up. Large chart says we have the potential to break. Let it get below the bouncy things. And it really does. It sets the tone. Does that make sense, Caleb? It's that little bit of patience that keeps you out of the headache. And not a tick, right? Not a tick, not 2 ticks. Let the whole bar clear. Awesome. Good lesson there. Miss Jen, only one trigger through. 2 or 3 rules met. I'll wait. I like it. Not willing to trade into the termination condition, Jen? How did that work out for you? Let's go back. Oh my gosh. Jen, it worked out beautifully, didn't it? Kept you out of a loser. Way to follow rules. Oh, there it is right there. Seems the rules work. It would appear so. Great job, Jen. Sometimes the pictures, rules not met, are even more powerful than the rules met because we're all tempted, right? Pivot, stop out, market reversal, everything looks strong. I see an entry, and Jen says, wait a second, this could stop the market the same way it did here. The same way it did here. Let me avoid that loser. I'll wait for the good ones. Nice job, Jen. Nice job. And then Ron, back of price clears trouble. Back of price clears trouble. Easy money all the way down. Price outside smalls, large stack like bunker busters. Base hit. Great job, Ron. Welcome to the Chili Dog, ladies and gentlemen. This is what a lot of you are going to migrate to. This helps fill time in between trend trades, without a doubt. All right, guys, that's our first hour. I'm going to shut that. I'll leave you with crude oil. We'll see what happens here. I'm going to take just a couple minutes. If you have a picture, post it. If you have a question, post it. We'll go spend a little time on TradingView too when I get back. Back in a few. 45 minutes of silence on YouTube. Oops. Oops. How are you guys doing on your transition over to TradingView, those of you that have made the move? Since nobody wants to answer on momentum. Triggers are starting to roll. Off it goes. Caleb, let's see what you're doing. Gary, you have twice the indicators that I have. That could be part of the struggle. I like this. Caleb, why did you do it? I don't know. I don't know why you got in. You didn't tell me anything. Let's go through it. Let's go through it. Can we annotate it together? Let's talk about this first. You see how that Fibonacci reverses everything and sends these large triggers or these small triggers screaming up? That's a good look, right? Termination. It's not quite momentum yet. It's not that strong trigger look that we're looking for, but it's a good look. Your small chart, Caleb, do you see how those large triggers roll? And now they're going vertical, and you've got odds favorable momentum. Caleb, what you took is the perfect trade that we started teaching back in 2004. If this termination condition sends the small triggers up, you are going to buy a pullback to those small triggers, and it looks just like that pullback to the mid-band right at the large triggers. Caleb, this is a beautiful trade. Beautiful trade. And you had room to get to trouble. Caleb, this is rock star status, man. Really nice. Does that all make sense? It's not quite a high probability trend trade. Not quite a high probability trend trade because we don't have that odds favorable momentum. We don't have everything pointing the right way, the same way yet. But what you have, oh, there it is. Thank you, John. I needed that picture. Hit a fib, sell the triggers. And you just did it the opposite direction. And I mean, you did it like a pro. Great job, Caleb. Nice. And great hold right up to trouble. Should have waited to get out, but you went too fast. Feared it may turn too quick. No worries. With this look, you'll learn how to hold these eventually. But you got paid, my friend. And you got paid handsomely. Nicely done. And then Paul transitioned over to TV in the next week or so. Awesome. Looking forward to it. Yeah, closer to the fib is where it typically happens. This one happened a little further up, but it still fits the rules. And you have rules for when to get out so you don't make emotional choices. That's it. Management. It all goes back to management. And then Gary, what I was mentioning, just so I want you to see what I see, and maybe this will be helpful. So this is, well, first of all, you're a 5-minute chart, not a 15, so you're changing workspaces, and you have 16 indicators on a 5-minute chart, which is absolutely nothing that Nexgen provides or teaches on. So I think you're creating some challenges for yourself. Somehow you're changing your time frames, and you have 9 indicators more than I do on my large chart. Simplicity, guys, pays dividends. More isn't always better. More is not always better. Victor, you call this trade the chili slaw dog praying. Momentum, absolutely. Clear path, nope. Got into trade while typing, moved, stop loss to minimize the risk. So let's look at it. Victor? Momentum, gobs of it, right? Tons of momentum. And look at that. Pull back to the mid band right inside of triggers. You had an entry area. What were you missing? The clear path. Victor, without that clear path, if something changes on my small chart against this trade, I'll manage aggressively. Does that make sense? You identified what was good. You identified what was bad. Manage the trade. I like it. Nice trade. With that much momentum coming from a termination in a pretty easily defined low risk entry, you're already break even heading up into it. John says, I will still take one without a clear path if there is super duper ultra strong momentum. Super duper is a technical term, guys, on both sets of triggers. Strong triggers break things, but he manages it quicker. And does that make sense, Victor? You know what you're up against, so you know you may have to manage it a little more assertively. Nicely done, man. High fives. Just got stopped out and only lost 5 ticks. So let's talk about your targets. At 65.89. At 65.89, actually, let's go through it a couple ways here. You have trouble at 65.84. See the fib? Which means that your first potential trouble spot is right here, 65.84. You do what I used to do. You slide it over so you can't see the fib. 65.89 was trouble, so you had more trouble here. And then obviously 95 is trouble, right? So you've got 3 levels here, and you're in at 77, rock star. Is there any reason you can't get paid at the first line of trouble and break even, 70 bucks in the account? When you hit the next line, maybe you lock in. So knowing where trouble is kind of the next step in that management. Let's go back to, was that crude oil or was that S&P? That was crude oil. Never try to lose money into a termination condition. So you made it to 89. You made it directly to your divergence high, 100%. And that's where it turned. And that's exactly what John said. Never try to lose money into a term. There's no reason to lose money on this one, right? You're in, you're at trouble, get break even. Good stuff, man. And if you can get to break even, it's no harm, no foul. If it ends up breaking, you're good. And John's right. You paid a lot to know where those areas are. Nicely done, man. Good stuff. Conversations about everything you do, guys. You'll start doing it better. Jen, 50-50, divergence prints. You didn't take it because of divergence. And another avoidable loss, Miss Jen. So happy. Nicely done. Following rules. Following your rules. I love that. That's the hardest part of trading, isn't it? Is there anyone in here that thinks it's difficult to find an entry? All you got to do is mash a button. Entries are easy. Finding the right entries, sticking to the right entries, managing those entries. Both areas may hold, so chop expected. No reason to risk here. Price reaches yellow 1-to-1s. Guys, look at these tails. John didn't mention it, but I know that he's thinking it. They tried to push down and couldn't. They tried to push down and couldn't. They tried to push down and couldn't. Tried to push down and couldn't. Guys, there is no reason from the wrong side of the smalls with all of these tails to believe that market is magically going to go down. No reason to risk. And because of terminations and all the tails, John said, well, reach an area on the small chart, triggers roll on the large chart, go long from an HVA, get out of trouble. Nicely done, John. What does the big chart say? Is there a way to capitalize on the small? That was earlier, not live now. Good stuff. Jen, you're trading so much less with the great conversations. I enjoy the conversations. But let's ask the important questions. Does less trading equate to less money for you? Is not being always active? No, that's all capitals and a lot of O's. So are you suggesting, Jen, this is where I lead the witness, that you could actually do less and make more by following a plan that you can prove wins more than it loses? Totally leading the witness. But how long does it take to believe that, right? When I tell you guys, you're not going to see me pull the trigger a lot in this room, because if it doesn't fit the KISS plan, I can't. I'm not allowed to. I get in trouble. There's a reason. There's a lot of waiting, but it pays, right? All right, termination that reverses the market. Yes. So what you do, okay, this is a high probability. Strong triggers on the large chart. Yes. No terminations on the 13-2. What you do have here, Joel, is that gap theory again. Do you see it? Huge gap back to the large. And Joel, you're not running your synthetics. So you had fibs right there at 77 that aren't showing up on your large chart. You've only, it looks like, for whatever reason, they're not showing up. So it was really a 50-50 trade. Anytime you guys see a blue line or a red line on your 5-1, this is at 77, 76, I just want you to assume that it's here. Just say to yourself, you know what? It's here. There's my fib. I see it here. Because one of the things that the software gives you with the accuracy, guys, and the way your large chart is designed, and you don't have to keep it like this, is you're going to have Fibonacci areas from 5-1, 21, and 13. And they're all equally as important. Does that make sense, Joel? So you're not running tick play to avoid crashes. So that means, my friend, that it is your duty, it is your obligation as somebody that wants the highest chance of success to believe that there's trouble there. And now you have a 50-50 with divergence. How do you feel about the trade now? Now it doesn't fit your rules, right? Now it's a completely different picture. So you can run it without the tick data. And one thing you can do, and I've done this before, so let me kill my tick data real quick, and I'll show you just a little way around it. So when I look at my small chart, I've got something right here at 96. Joel, just take a horizontal line and put it at 96. And now you know. Now you know that there's trouble there. And it doesn't matter what color it is, right? Watch this. If I cover the red line, 2 triggers above, 2 triggers below. Doesn't matter if it's pink, blue, green, polka dot, right? Come back, 2 triggers below, 2 triggers above. All triggers above behaving as support. So, guys, it's okay. Go back and draw those in if you need to. If you don't want to run the tick replay, run it on your small chart, and you'll be good. Good stuff, Joel. John said in the room, if I was going to trade, would be with strong triggers. See if I can get away with it. Says down, strong triggers, trouble in the way, odds favorable momentum, HVA, and lost that one trading into the termination conditions. Yep. right, guys. Do I have strong triggers on my large chart? Jerry PGI, what do you think? Ollie Hayter, what do you think? Andy V says yes. Awesome. Joe says no. John, stop. John Novak, go away if you're going to do that. We're talking about momentum. We're only talking about momentum. So when the question is there momentum? Let's answer the question, John Novak, about momentum. So strong trigger lines for the brand new user. Strong trigger lines for you guys fresh out of the box, looking to have that advantage. One of the things that has to happen for the absolute best look is that both small and large are going the same direction, that the colors match, and that there's space between the two. This is the absolute best look ever. That's your strong triggers. So as a brand new user looking for a high probability trend trade, this is the look. When they don't agree, you don't actually have strength yet. So when we look at this picture, we can say, you know what? I don't have that advantage of momentum yet. And then let me get to John's lesson. Once you answer your question about momentum, you're going to ask yourself, where's trouble? There's a big red line. And what does it mean when all four triggers are below resistance? Resistance is likely to hold, right? Resistance could stop the market. Resistance could create a bounce. So you can say to yourself, I can't go long. Everything is below. The market's probably more likely to go down than up. Can I find a way when everything agrees to capitalize on the look? Does that make sense, guys? First, we look for momentum. That's your best look. Don't quite have it. But then you start going into price reach resistance. Every trigger is below. Let me see if we can find a little bit of agreement so I'm not fighting momentum, so I'm not fighting stuff. And guys, this is where you can begin to capitalize a little bit sooner, a little bit faster. Caleb, do you remember when the termination triggers roll? If these large triggers roll, you guys may start looking for opportunities to go down from below the fibs with the immediate momentum down. So I don't have the perfect momentum. It's kind of not there. I've got a clear path to the downside. Let's see if a smaller, faster chart can kind of confirm what we're looking at. But John Novak was spot on. 4 triggers below the red line. Guys, we're less likely to go up than down. He just gets ahead of himself a little bit because he's so darn smart. Count triggers, guys. It keeps you from believing that this long has a chance. And if it does nothing else for you, it keeps you from believing this long has a chance. Do you guys remember that strong side of the triggers lesson? We're on the strong side of the fast triggers. Small charts trying to roll. We're coming from a termination. As you grow with the software, you're going to start to see some opportunity here. You're going to start to see some ability to find a way to capitalize without it being perfect. And you're going to be able to do it because you're always looking for perfection. And if it's not there, you're going to go back to your lessons and you will find a way. And sometimes there's just better to do nothing. Nice read, John Novak. Just a little premature. Little premature. That's one of the things that happens too. Guys, the better you get reading at indicators, the better you get at reading your indicators, the faster this happens. And your mind goes to the next thing. Do I have this? What is this? What is that? And it's just going to lump it all together until you can find a good trade. And then the look on TV was strong side of the small triggers, pulls back to the mid band, close below, and it's working its way down. Thanks for that, John. Strong side of the small triggers, pulls back to the mid band. There's your close below. Second lower divergence. And look what's happening. And John Novak, I believe you posted a picture about termination, small triggers down. Look for a pullback to those small triggers even. And second divergence, second lower divergence is a good look, right? All right, Jen, let's look at it. Let me blow it up a little bit. I've got, whoops, 1, 2, 3, 4 triggers below the zone, Jen. I've got room back to treble. That's good. Estefania, have a good one. John, not quite. It's close. Continuation style entries. I prefer the momentum style look, John. Coming from the termination, triggers roll. There is a mid band right inside of the small triggers. Jen, this is the one you were working on, right? When an area holds, triggers roll. Looking for that pullback right to the mid band, right inside of those small triggers angled down. Little momentum style look. Taking advantage of a termination condition, taking advantage of 4 triggers below resistance. We'll see how that works out. Guys, I'm going to stretch my legs for a second. When I come back, it's your room. Tell me what we're going to talk about. I'll see you in a few. Didn't work out, did it? Large triggers are up, small triggers are down. That was it. Fits the rules. Didn't happen. Guys, we're just looking at indecision. One of the reasons letting momentum lead the way creates easier trades. One of the reasons I didn't leave the order activated, because it doesn't fit the KISS plan. All right. You guys ready? We're gonna play a little bit today. We're going to do some bar by bar. This is just something. We'll see if this works out. The market's trending down, and it reaches divergence low. Maybe this game isn't going to work out. We'll see. What do you guys think? Is the area likely to hold or likely to break? Likely to hold. 1, 2, 3, 4 triggers above. Paul says it's likely to break. Paul, you just took a loser, right? Just go with the rules, guys. What do the rules say? Market comes up, comes down, hits the divergence low. Is the area likely to hold or likely to break? How many triggers are through? 1 through, 3 above. What do you guys think? Guys, don't guess. Use the recipe. Only 1 trigger through. You have to, in the moment, say it's more likely to hold. All right. It looks like it's trying to break, and now we're into 1-to-1s. How many triggers are through the 1-to-1s? Hold or break, guys. What do you think? Hold. 1, 2. Oh, it broke, and then it rolled. Guys, this is all you're doing every time. It's kind of fun, right? Coming up, price reaches a divergence high. How many triggers are through? Right now, I have to say it could hold. And then, now I say, hey, it has the potential. Maybe I'll look for a trade. Now I've got 3 triggers through. Egads. Now it's definitely more likely to break. There's one of those little tails on the potential. And I hit Fibonacci resistance, and I start over. Does that make sense, guys? Count triggers. You'll be wrong sometimes, but the goal is to say, you know what? This could stop the market. This could create an untradeable bounce, and my trigger lines tell the story. And look at it. There it is again. Just count triggers. And it's no fun feeling like you have to not trade. Market's going down, momentum is pushing it, life is good, nothing in the way, and it reaches the divergence low. How many triggers have broken through? None. Is it okay to not trade into that area? Is it okay to not hope things break? When am I more likely to not take that risky trade? When I took the trend trade here to get down. When I got paid on the easy trades. When I made money when things were good instead of hoping things are bad. Let's see what it does. Right to the 1-to-1s, and it ends up, 1-to-1s end up holding. Back to the 1-to-1s, divergence low. It might break, it might not break. Now it's breaking, now it's broken. Let's look for an opportunity. Down it goes, hits Fibonacci, and we stop again. Potential, 3 triggers through. Now it's broken. And we get some retracement. 1-to-1s, sit on my hands. Thank goodness I did. Fibonacci support, sit on my hands. Now it has the potential, termination, no triggers through, termination, 2 triggers through, and sure enough, it retraces. Guys, this is the basis of everything, and you can do this. Just scroll through. Smalls above, large below, has the potential, and boom, closes the gap back to the triggers. Large below, small, I'm right into it, and potential to break, still potential, ultimately does not. No momentum, sitting on my hands. News was inflation, it was flat. Potential to break, and doesn't. Over and over, guys. Over and over. And here we are live. So what do we think about this line right now as we're speaking? If we're counting triggers, I don't have momentum, and I'm literally sitting on top of a fib. Can you give me a why in the room? If your brain is telling you it's probably better to wait a second than it is to hope. That's day trading, ladies and gentlemen. Recognizing an advantage. Do I have momentum? Is my path clear? Let's find a way. We just got 4 triggers above this line. We had 4 triggers below, but we didn't have any momentum to push it down. Now we've got 4 triggers above. They're trying to push. Can we get those small triggers above the large triggers? Everything says up. Larger up, smaller up. All of my indicators are up. Guys, we're leaning to the upside, aren't we? I don't have strong triggers yet. So I've got 2 out of 3. I've got an area inside of triggers, but dang it, there's a fib. I don't have my tick data on. There you go. Ed, you chickened out. Rules say Ed sucks. The rules don't say that. All right. So Ed, let's go through it. I love that 5 years later you still refuse to annotate a chart. All right, Ed. Did you have momentum? Nope. Smalls are above the large. Did you have a clear path? Absolutely. You had 4 triggers through. Did you have an entry area? Absolutely. Pull back to the area inside of triggers. That's okay. The only question that I would ask, Ed, is what changed from entry to exit? What changed? Because you got in at 71 and you got out at 71 and a quarter. I believe it was written in the room earlier. Having a management plan. That's it. You just turned the golden goose into fried chicken. It's a great trade. Coming from a termination, you don't have momentum, but you got the clearest path ever and an easily defined entry. This was a beautiful trade to take you down to that divergence low, and you just don't trust it. And how do you develop trust? I don't know. Go back and look at it. Recreate it. See what it does. 80 out of 100 times. 8-3 above the triggers. Coming from the zone. Everything says up. John's looking for an HVA line. And I'll be darned. It came right back to the HVA line. He reloaded and added. And it sure worked out. HVA. Oh, you reloaded the chart. Yeah, guys, your chart will start over if you reload it. But it did everything. Did everything you wanted it to do. And here's the beauty of it. The conversation that John had with himself is because of this. This is what the market has to give me in order for me to risk my money. And when the market gave it, he was willing to risk his money. He knew exactly what it was going to take to get him in before the market ever even hinted that that's what it wanted to do. That's where having a plan, guys. That's where having a plan just pays dividends. This is what I need to have happen. And then what's the most likely outcome? Most likely outcome Is at least making it down to there, right? And it was a great trade, man. You'll develop some trust here eventually. Smalls above the large, no momentum. Absolutely a clear path. No areas inside of triggers. Do you see how 2 out of 3 were gone? And look what the market does. Odds favorable momentum. Nothing in the way. There's your pullback to the midband right on top of the triggers. Sure enough, it continues up. Momentum, it's starting, right? Smalls are above the large. It's starting to put a little gap in there. Clear path, definitely not. Entry area, you could define it, right? Wait for it to break a little more. Wait for the triggers to tell you, and there's a great example of it, right? S&P, avoidable loss, guys. 1 of 4 triggers through, multiple divergences, and it crashes right through it. And then Victor, 2 triggers through, 2 triggers not. Divergence on a 50-50 trade. None of your areas are inside of triggers. What do you think, Victor? I've got some momentum, don't have a clear path, and my entry is coming from the wrong side of the triggers. Do I see enough to make me want to risk money? My plan says no. My plan says I can't take this trade. It doesn't fit my rules. Does it mean the market won't go up? Of course not. But it means that I've recognized a pattern that I can prove. Whoops, wrong one. Creates an advantage. Da, 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 da. It's not a strong bottom. We can call it momentum. We can call it momentum. Divergence kills it. I've got 2 out of 4. And I don't have an easily defined entry area. And it went way more than 4 to 5 ticks below. That was a perfect read, Victor. 2 triggers through, divergence, and then Joel, what did you decide about drawing in your fibs over here? Didn't that trade directly into a Fibonacci resistance area? On your chart it did. I know you're trying to save data. You gotta look. We'll see what they do. Post them if you got them, guys. Ask if you need to ask. Let's go look at TradingView. I'll be darned. Strong side of the triggers, coming from the zone. There's your HVA line right there. That's what John Novak's been looking for all day. And off it goes. To the races, right to trouble. That's crude oil. NASDAQ, flat triggers everywhere. Zones galore. That's a tough look. Guys, look at how that market's just been flat. S&P, that was a spike. Fun stuff. Gold went the other direction. Strong triggers, all sorts of stuff in the way. And the small chart doesn't support longs with the small triggers down strong. XRP, it's the same thing, guys. This is crypto. Strong side of the triggers, odds favorable momentum, trouble in the way. Oh, Jen, it didn't work, did it? Man, this has been a great day for you chili doggers. It really has. Momentum trades have been really solid. Potential to break. 3 times, 3 avoidable losses. That's the stuff that makes me happy, guys. It's that repetition. It's not giving money away because your rules weren't met. It just makes life easier, right? All right. Ed, you did have strong triggers. I don't see any fibs in the way. You took a great entry. Stop's a little low, but it makes sense. That was this one right here, Ed. I've got all sorts of Fibonacci there. Are you running tick data on your large chart? I had fibs galore there. CQG. Yeah, but if you right click, are you still on NinjaTrader 7? Is that 7? That may be something to do with it. Because I had a 21 range. I also had a 5-1 range there. On your chart, Ed, it's the perfect trade. On your chart, it's the perfect look. My chart said things may go sideways. And they did. And then there is smalls breaking above, 4 triggers, pulls back to the mid band, into resistance. Look at that reaction off resistance. That's impressive. That's impressive. Somebody knew about that number, didn't they? Somebody knew about 75.92. Somebody knew about 97. You guys know that it was you, right? That fib has been there since 6:46 a.m. And they couldn't break it here. And they couldn't break it here. They couldn't get to it here. And they couldn't break it here. What do you guys think about 65.96? Dear Diary, today's 65.96 put in a freaking ceiling. I can let it break before I tried to trade long. And you guys know about it. It's there. It's good. You see it. You have rules for it. And I want you to feel good about that trade you took. It made sense. Termination, strong triggers, 3 triggers through. Guys, no divergence potential. This fits my KISS plan. If a termination condition reverses the market, if I have strong triggers, 3 are through the area, no divergence on the small chart, my job per my plan is to sell a pullback to an area inside of triggers. What's going to kill this for me? If I hit that stupid 65.55 first. Here comes my reversal bar. Come on, reversal bar. Push that market up. Does this make sense, guys? Separation between the small and large. Potential to break. 3 triggers through. No divergence. Strong triggers. Areas inside of triggers are where the market is most likely to bounce, which is this zone right here. I'll get in a tick or two low. If we get our entry, the KISS plan says my stop is 5 ticks above trigger lines, which is just above this box at 86. Can you guys give me a why, if it makes sense? Strong triggers, potential to break, strong top, no divergence, strong triggers, pull back a tick or two below the area inside of favorable large triggers. It tapped it and didn't fill. If it goes down without us, I'm going to giggle. But we sure called that one to the tick, didn't we? They may come back for us. Oh my goodness. They just rested on it. Can we fudge it? There we go. We'll fudge it. Stop where the market shouldn't go. If I get a reversal bar, then my new stop is 2 ticks above the reversal bar. If they hit my stop, I'm out of the trade. So we're going to KISS plan, guys. Strong triggers, potential to break, pull back to the area inside of triggers, enter damn near the high tick. If I get a reversal bar, I'll reduce my risk 2 ticks behind it. But guys, if I get a reversal bar, guess what? That's my first target. So I'll be break even on a reversal bar. That's what the KISS plan says. So now we're at the mercy of momentum. We're at the mercy of that potential to break. The market will do what the market does, but this fits my plan. Strong top, odds favorable, no divergence, enter at the area. Fits my rules. I'm in control of everything I can be in control of, guys. This is where new users begin to panic. Oh man, I'm down 80 bucks. I'm down 80 bucks at an area inside of triggers. I'm still in the good zone. I'm still in the rules met zone. And we're just going to wait and we're just going to see, guys. This is fun. Are there any questions about the momentum on my large chart? Are there any questions on why this is only the potential to break and not a broken area? Any questions why my stop is at 86 and not at 79? Guys, we just hit the last area I'm hoping stops this market. Yellow 1-to-1s inside of triggers. It's still rules met. We're just following the KISS plan. We're learning to read our indicators. We're learning to say, hey, this is momentum. This does have the potential to break. The market could bounce from an area inside of triggers. I don't get to pick which area, but because of the momentum, I entered at the lowest area. Am I following the rules? Does it follow the plan? I feel like 100%. If I get a reversal bar, then my new stop will be 2 ticks above that reversal bar. That's what the KISS plan says. There it is. 1, 2. If my first target is reached, I'll go to break even. Did anybody absolutely crap their pants being down $180? So John says, if there's a higher divergence, divergence is the rule to exit the trade. You can put your stop 1, 2 ticks above divergence. But John, we're following the KISS plan, brand new users, just learning basic 100% mechanical. But you're absolutely right, guys. The KISS plan says, let me bring it up. The KISS plan says, in management, if divergence prints, exit the trade. I'll know about divergence 2 ticks above that reversal bar marker. No, this is good. Because it's a 50-50, John. You caught me in a moment. If divergence is true, my plan says hit the close button. By being 2 ticks above the reversal bar marker, guys, it gives me a little bit of reaction time. But we're not even near it yet. As the market goes down, that risk decreases with the divergence potential. Thank you for that, John Novak. Risk reduction doesn't guarantee a winner, guys, but if you can make your losses smaller than your winners, you're good. When your small trig's up so strong, divergence can ruin your day. If it's true, absolutely. But right now, it's just potential. So we'll see what happens. Just following the KISS plan. Whoops. I like that I'm below the small triggers. That makes me feel good. Come on, one more tick. Oh, it hit us, but it didn't fill, guys. All right, $100 in the bank. Absolutely nothing to lose. Guys, this is where you may have to make a decision. Do I want to get out at 55 instead of 52? Do I want to put a target at something that could stop the market? Or do I want to hope that the market's capable of breaking that area? We're going to keep it KISS plan. We're going to keep it at 200. It's still only the potential to break. So once again, 2 ticks above the reversal bar marker. If divergence is true, management says exit the trade. It's fun when you have no emotion, when all you're doing is following if then. My plan says, if it looks like this, enter here. This is where your stop goes. If I hit my first target, go break even. If divergence prints, exit the trade. My stop is in a place that allows me to do that if divergence is true. What's good in this trade? Momentum, potential to break, small triggers down, large triggers down, synthetic triggers down. Guys, everything says down. It's easy to get caught up in the fluctuations. It's easy to worry when you're still in the range because you don't trust the idea that these one-to-ones could have stopped and created a bounce. Isn't that amazing? Guys, they missed our stop. They never made it where the market shouldn't go. Our worst case scenario on this trade is $120. Our best case scenario is $300. I've already been paid. I've got nothing to lose, guys. It's pretty easy to sit on my hands and do nothing. If divergence is true, it's an exit condition. And John's right. Some people will add on at the one-to-ones. I probably would have with this look. And now we're just waiting to see what happens. Uh-oh, there's an up bar. Divergence isn't true yet. It's not true yet, guys. Don't trade on potential. Let it be true. There it is. Out of the trade. That was $130. And now whatever happens next doesn't matter to me. I'm out of it. So let's see. Did we follow the KISS plan? From a strong top or bottom? Absolutely. Strong triggers on both charts? Absolutely. No divergence? Absolutely. Enter at the area? Absolutely. Did we manage it correctly? Initial stop 4 to 5 ticks beyond the trigger lines. Kept me in that trade to get profits. First stop movement 2 ticks above the reversal bar. Reminding myself divergence kills the trade. $100 on the first, $200 on the second. If divergence prints, get out of the trade and don't worry about what happens next. This is the plan that's handed to you every day. Learn the plan. It takes the emotion out of trading. It keeps you from chickening out, right? To the zone, to the zone, to the zone. Absolutely no price below any of them. And you can see the reaction. I am. Can you guys hear me? Give me a Y if you can hear me. Yep. Thank you. Or raise the volume. Yeah, it happens. Andy V, did you get your lesson today on termination conditions? Was it you that asked about it in the room? It wasn't you? Okay, sorry, it was somebody. I'm excited to see what happens when divergence prints on one of these trades. So far, it's kept Jen out of 3 losers, right, Jen? Kept you out of 3 losers. It kept me from giving any money back. I made $130 on this trade by following the plan. So those of you that are new with me, does the plan work? Absolutely it works. From stop placement to entry to reasons for exit. Management's the hard part, ladies and gentlemen, because there's that little devil on your shoulder that says, hold it. I know the conditions are changing, but hold that trade. What if it goes down? What if you can make more money, right? Guys, look at this. But there's that little angel on your shoulder that says, you know that this kills that trade more often than it doesn't. You know that you can get paid at $100. And it completely changes the dynamic of how you approach the trade, guys. Let it be very, very if-then. Let it be very pragmatic. Let it be very emotionless. You'll change your plan as you grow. Some of you will say, you know what, I got paid, but I'm going to hold this trade and I'm going to keep a stop. And that's your right to do it. Some people will say, well, I'm just going to take them both off at 100 because it's only a medium probability, and that's your right to do it. But you got to get the reps in, guys. And until you get the reps in to build your own plan, there's nothing wrong with trading a plan that's been tested and proven for you. And they're still pushing up. There might be something to that divergence when it's only potential. How does our exit look now? At least one of you in the room is like, man, it's going to drop and he's going to miss all the money. Look at it go. Trading doesn't have to be stressful. Did I sound stressed out during the trade? Did I sound nervous during the trade? I mean, I know it's just simulator, but each and every one of you knows that you can get full pucker on simulator. Your brain doesn't know the difference. Boaz, odds favorable momentum, absolutely nothing in the way, pull back to the area inside of triggers, and he says early exit. You guys want to see how great things happen in your trading? I'm going to open up my spreadsheet and I'm going to go to yesterday where I stole this trade from Boaz. Odds favorable momentum, clear path, pull back to an area inside of triggers, easy money. That was yesterday. Odds favorable momentum, clear path, pull back to an area inside of triggers, easy money again. The most successful traders you'll ever meet do the same thing. They have a plan with a very specific set of rules, and they follow those rules. Boaz, absolutely beautiful trading. And it's not a coincidence that he's up money on the same look on 2 different days. And boom. Nexgen has worked tirelessly to provide you guys with indicators and a plan to find success. Best software in the world, without a doubt. And dare I say, best education in the business. Guys, you can get feedback on everything you see, everything you do, everything you try. All you have to do is post in the room. This is the world's greatest elliptical, guys. It has every bell, every whistle, every cup holder. If you don't figure out how to turn it on, it's not going to get you skinny, guys. You just got to learn your rules. Follow them. Thank you, Andy. And if you're stubborn like me, you're going to fight every now and then. You're going to break rules every now and then. You're going to make mistakes every now and then. That's okay. It's part of it. Show me your mistakes. If you took a loser today and you didn't share it with me, guess what? You may not get better. If you gave away money on a trade that was winning and then it turned against you, show me, right? Joe, you are an outstanding chart reader. An outstanding chart reader. You're focused on your consistency now, right? Making sure. When you pulled the information off of your charts that could keep you out of trades, that was a perfect read that you didn't take. Guys, when you adjust your workspaces, remember that your workspaces weren't John Novak drunk in front of the computer one day going, hey, I think this will work. There was a lot of thought that went into these workspaces. There was a lot of thought that went into where these fibs are and where they come from. So if you adjust it, remember, you're adjusting the plan. You can't substitute baking powder for soda and expect the same results. So Joel, make sure that you're putting your fibs on there, even if you draw them in yourself so it doesn't affect tick data. Everything has been designed to offer you guys the highest chance of success. Morgan, you invited your friend to the Discord service. He's very interested. Do you just want him to reach out to you via Discord? Is there another preferred way? Who's your client advisor, Morgan? Is it Dean? Jim Forbes? Jim should be able to give him permission to talk in the room, to come in and see. He should be able to just jump in even without those permissions, but he may not be able to post. He'll give us, you can message me if you want. Give me his Discord name, and I'll spearhead the efforts to make sure that he gets access so he can post and ask questions and stuff. Excited to have him. Have him sign up for the demo. That sounds good, Morgan. We'll get him in. I love it when you guys bring your friends. Everybody should bring a friend. Why would you keep this from the people you love?